morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're continuing to take a look at recently released financial results, and today we are focusing on the conglomerate sector and looking at two of the big boys in the conglomerate sector, in particular, the Antimacaque Group as well as Massey Holdings Limited. Now, both groups would have been negatively impacted by the effects of COVID-19, no surprises there. And Antimacaque would have actually fared a little less well under the current circumstances. So let's take a look at the results and see how both of these groups would have performed and what could be in store for investors in the coming quarters ahead. Now, firstly, let's take a look at Massey, and for their 9-month period ended June 2020, the group reported an earnings per share figure of just around $3.44 per share, which was a 10.4% decline from the $3.84 recorded in the prior comparable period. Now, the relatively good news was that revenues were down just around 4.6% from just over $9.1 billion to around $8.7 billion odd. Operating profits were down just around 13.3% from $582 to $505 million. Overall profits for the period were down just around 11.7% from $416 odd million to just around $367.2 million. So not too bad of a performance in the context of what's going on and taking place, particularly with consumer activity amidst COVID-19. From a revenue perspective, most of Massey's segments would have recorded declines. The motors and machines segment would have recorded just around an 11% decline in revenues from 1.9 to 1.7 billion. And gas products, a very similar change in revenues from 771 million to 681 million. The good news is that integrated retail, which includes the Massey stores, would have improved from 5.36 billion to 5.57 billion, and that's certainly the group benefiting from an increasing trend of persons eating out less and probably buying more retail food stuff and benefiting through the Massey stores segment. So that's one of the silver linings of the overall COVID-19 impact. But generally, there was declining revenue and declining profitability. Geographically, no region was spared. All major jurisdictions would have recorded lower profit before taxes, but one jurisdiction in particular would have been hardest hit on a percentage basis. That is Barbados, falling from 19.6% of profit before tax for the group in 2019, the 9-month period, to 15.2% in the comparable period. Trinidad and Tobago held its own relatively at 43.6%. And increasing in relative importance was Guyana from 16 to 18.1% in that pinkish segment. The Eastern Caribbean increased marginally from 10.5 to 11.1%. And Jamaica also improved or increased in relative importance from 7.3 to 8.5%. So what can investors look forward to? Well, at a price of $59, Massey is trading at a relatively attractive 11 times price to earnings, which is below the sector average of 14.5 times. And right now does offer investors a dividend yield of 3.8%, which is fairly attractive compared to the sector average of 2.2%. However, there remains quite a challenging operating environment, and as noted earlier in the morning brew, there has been a resurgence in cases, not just globally, but in particular at the Caribbean level. And that is probably going to prompt or prolong a continued weak economic outlook for maybe perhaps longer than anticipated. And on that basis, Bourse maintains its neutral rating on Massey. Turning quickly to Antimacaque, and for the 6-month period ended June 2020, the group reported an earnings per share figure of 48 cents, which was a 66% decline from the $1.43 reported in the prior comparable period. Revenues, again, were not down as significantly as earnings, down just around 11.7% from 3.098 billion to 2.71 billion. And overall profits for the period were down just around 68%. However, because probably of a lot of fixed costs from 303 million to just around 97 odd million. Again, that's for the 6-month period. Now, when we take a look at the profit before taxes generated by the Antimacaque Group's segments or major segments, we can see that no segment was really spared. The manufacturing, packaging, and brewing sector or segment was down just around 50% from 153 million in that HY 2019 period to 71 million in HY 2020. Insurance and financial services took the largest hit of around 70%, from 158 million to 46 million. and that would have been driven by increased loan loss impairments, which we do not expect to be recurrent at the same magnitude in subsequent periods. And the automotive and trading and distribution segment would have also fallen just around 40% from 53 million in profit before taxes to 31 million. Now, again, the Macal Group, as seen with the Massey Group, would have been affected by lower consumer activity. And going forward, that is expected to be a trend, perhaps not as pronounced as in the past 6 months or so, as things begin to normalize and the society begins to cope to some extent with the new normal. However, disposable income as well as overall employment is expected to be challenging in subsequent periods, and this could lead to lower overall consumer demand. So at the price of $52, Antimacal is trading at a price to earnings of 18.6 times, which is above the sector average of 14.5 times. And the group would have taken a very conscious decision to not pay dividends in the case of its final dividend for 2019. And in terms of its interim dividend, would have reduced it by just around 50% from 30 cents to 15 odd cents. And that would have led to its dividend yield being about 0.9%, which is below the sector average of 2.2%. So because of those elevated valuations, the continuing adverse economic outlook for the Macal Group, as it would be for most, if not all companies, but offset by the group's very strong financial position in terms of financial health, Bourse is going to maintain its neutral rating on Antimacal. Well, that's it for this week's edition. For more information, give us a call at 2BORSE or 226-8773. Email us at invest@boursefinancial.com or check out our website at www.bourseinvestment.com. And of course, you can catch us in the Bigger, Better Guardian newspapers today. And that is it for this week. Have yourselves a wonderful week ahead. This has been the Bourse Report.